Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Josh Russell. He is with Legg Mason. We are going to take a look at value versus growth, and maybe a combination of the two is what you need to outperform. Josh, it's great to have you with us at Market Site, and that really has been a key theme in the markets lately. Is it a turnaround for value?
Absolutely, Jill. Thank you for having me. What we saw in September was a big rotation from momentum into value. On September 9th, we actually had one of the biggest days in value in the last 10 years and one of the worst days in momentum in the last 10 years. That was followed up a day later by also historically large movements in the two factors.
All right, let's pull up our first chart here. We're going to take a look at factor returns since 2002, and I would imagine this is why having a number of factors might be better than just one or the other, because they, especially in this market, can switch on a dime.
Absolutely. So this is a chart of long-short value versus long-short momentum based on the Dow Jones thematic indexes. Each point here represents a day of returns. And what you see is the orange line it contains 95% of our daily returns. So anything outside of that is really an outlier. Mm-hmm. The 2 days in question here, September 9th and 10th, are up here in the far left. So you can see just how far they are from the center of this distribution. The interesting thing here is on those 2 days, the market was more or less flat. So what you had there was a rotation out of expensive companies and into cheap companies, and you had a rotation out of high momentum companies into low momentum companies.
So as it stands right now, would you say that narrative remains the same? Because it feels as if momentum has kind of come back into favor.
Momentum had a bit of a resurgence, but then it dropped off again. Since September 10th, what you've actually seen is that in a long-short sense, value's up 4%, momentum's down about 4%. So I would actually say that this is kind of a normal rotation. These factors tend to outperform for a while and then underperform for a while. And value's been out of favor for almost a couple of years now. So you're really seeing a rotation back into value. All
right, so like Mason, I would imagine you're combining value and momentum, which is eventually going to lead to better outcomes when you look at it longer term.
Absolutely. So, investing in a single factor can be highly volatile, and value and momentum in particular work very well together. They're almost a poster child for diversification. In the long term, they're negatively correlated, which you can see on that chart.
Right.
But in the long term, they both have positive expected returns. So combining them gives investors better outcomes. You tend to have a lower volatility and a higher risk-adjusted return by combining them.
Are there any other factors that you would put within a portfolio or a wrapper?
Absolutely. I mean, I love quality and low vol too. If you add all four of those together, you get a really nice mix.
All right, and let's think about, we're going into the last 2 months of the year. Typically, seasonality kicks in, Santa Claus rallies, strength of the consumer has really been a narrative in the market. What's your outtake on that?
I think strength of the consumer plays well into value. So, you've had for a long time Amazon beating the other retail companies. These retail companies are beaten down, but they're primed for recovery here. Their fundamentals really aren't that bad, and I think in the long run you'd be better off not ignoring them.
All right, thank you so much, Josh, for joining us at Market Site. And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.